Bad insurance policy, 3 signs and how to react. Insurance policies are a safety net, designed to protect you, your loved ones, or your business from financial setbacks. But not all insurance policies are created equal. Instead of providing peace of mind, some could leave you vulnerable, paying for something that doesn't meet your needs. In this video, we'll dive into 3 key signs of a bad insurance policy and teach you how to address these issues effectively. Whether you're new to insurance or have had policies for years, this guide will empower you to assess your coverage and make informed decisions, building awareness to ensure your financial protection is stronger than ever. Insurance exists to protect you against life's uncertainties. It's a tool of risk management that lets you plan for the unexpected, whether it's a car accident, a house fire, or unexpected health expenses. Ideally, your policy provides financial support when you most need it, minimizing stress and offering timely assistance. However, not every policy fits everyone's unique needs. Some plans may leave critical areas uncovered or cost more than they deliver in benefits. Worse, some providers may fail to offer adequate support when you need help. These situations hurt you, the policyholder, while draining your money or adding unnecessary frustrations. The consequences of a poor insurance policy are significant. A coverage gap can mean paying out of pocket for a major loss. Overpriced premiums may weigh on your budget without corresponding value in return. Delays or poor provider communication during a claim could lead to financial strain in emergencies. This is why identifying and addressing the warning signs of a bad insurance policy is crucial. Let's uncover 3 primary red flags and learn how to react when you spot them. Have you ever assumed your insurance policy covered something, only to find out later it didn't? That's a coverage gap, a critical area where you're left unprotected even though you thought you were insured. Coverage gaps are one of the most common and dangerous signs of a bad insurance policy. Coverage gaps are essentially the blind spots in your policy, risks or damages that aren't included in your coverage. They could result from exclusions written into your policy, outdated terms, or a misunderstanding of what the policy entails. For example, a typical homeowner's insurance policy might exclude certain disaster scenarios, such as flooding or earthquakes. If you live in a flood-prone area but don't have flood insurance, that's a massive gap. Similarly, auto or health insurance might not cover certain common risks, like aftermarket car repairs or out-of-network medical services. The first step is to carefully review your policy documents. Look for the exclusions or limitations sections, and make sure you fully understand what's not covered. You can also discuss your policy with your insurance provider or an independent broker. Ask questions about areas where you might be at risk. Consider your unique lifestyle, location, or business needs. If you spend a lot of time driving for work, for example, you may want higher auto liability coverage. If you've upgraded your home with expensive fixtures, ensure those enhancements are included in your policy. Once you identify a gap, take action. Speak to your insurance agent or provider to discuss additional coverage options. Many insurers offer riders or endorsements, add-ons that allow for expanded protection in areas your policy currently overlooks. Another option could be switching to a policy that better suits your needs, even if it means choosing a different provider. Another serious warning sign is when you're paying high premiums, but receiving limited or insufficient benefits. This imbalance not only hurts your wallet, but also leaves you exposed financially despite the hefty price you're paying. Insurance becomes overpriced when the coverage it offers doesn't justify the cost of the premiums. For instance, if your health insurance plan includes limited services, such as only emergency room visits, while costing a fortune in monthly payments, it lacks the value that you deserve. Similarly, the world of auto insurance can carry overpriced policies. Some drivers might pay excessive rates for added features that don't match their actual risk profile, such as roadside assistance bundled into a policy they never use. To figure out if your policy is overpriced, compare it against market standards. Research similar policies from other providers to see if you're paying substantially more. Calculate the total premiums paid versus the benefits provided, and consider how this aligns with your future financial needs. It's also smart to directly ask your provider for a breakdown of premium costs. This can help you understand what you're paying for. Then assess whether all those components actually apply to you. For instance, if you don't need rental car assistance or extended warranties, ask your provider to remove such options and lower your premium. If your policy is overpriced, you have bargaining power. Try negotiating with your current provider to adjust your coverage or pricing. Most insurers will work to retain you as a customer, especially if you share competing offers from other companies. If negotiation doesn't work, don't hesitate to shop around for a better deal. Look for policies with transparent pricing that still meet your needs adequately, rather than simply focusing on the cheapest option. Switching insurers can often lead to better benefits at competitive rates. Customer support may not seem as critical when everything is fine, but when you need to file a claim or resolve an issue, the quality of customer service from your insurance provider can make or break your experience. Poor communication, confusing processes, or delayed assistance are all red flags you should not ignore. Some warning signs of bad customer service include inconsistent or delayed responses from your insurer, lack of transparency about claims processes or coverage details, difficulty reaching your agent or customer service team when needed, long claim processing times with little communication. Imagine submitting an auto insurance claim after an accident, only to wait weeks for an update or struggle to understand what documents you need. This kind of poor support could cause unnecessary stress during an already difficult time. Insurance is meant to offer solutions, not headaches. Transparent communication, timely claim processing, and knowledgeable representatives can significantly affect your ability to recover from an unexpected loss. Building trust in your insurer is essential, and good customer support makes all the difference. If you're experiencing unsatisfactory service, start by documenting your concerns. Keep written records of emails, call logs, or unfulfilled promises from your insurer. This will help you hold them accountable. Next, explore your options. Read customer reviews or check ratings on trusted platforms to gauge how others rate your insurer's service. Don't hesitate to reach out to other providers for quotes. They may offer better service alongside competitive policies. If your insurer's poor customer support consistently undermines your ability to access coverage, it's a strong sign that it's time to switch to a provider known for superior service. Now that we've outlined 3 major signs of a problematic policy, coverage gaps, overpriced premiums, and poor customer support, what should you do if you're facing one or more of these challenges? The answer lies in being proactive. Start by conducting an honest review of your current insurance plans. Seek third-party advice from independent agents or experts who can evaluate your coverage objectively. Research alternative providers to ensure their offerings address your needs without introducing new issues. If you decide to make changes, be cautious. Before canceling your current policy, confirm that your new policy is active to avoid any lapses in coverage. Insist on clear communication from potential new providers about claims, benefits, and exclusions. It's also essential to advocate for your rights as a policyholder. Speak up if your insurer is failing to meet their obligations. Regulators and consumer protection agencies can support you if necessary. Even if your insurance seemed perfect when you first purchased it, time and circumstances can change. A new home, an evolving business, or shifts in your financial priorities can all require policy updates. By reviewing your insurance policies regularly, at least once a year, you can spot potential issues like coverage gaps, rising premiums, or declining service quality early. Schedule time to reassess during significant life changes to ensure your plans remain aligned with your needs. To recap, spotting a bad insurance policy boils down to identifying 3 major signs. Coverage gaps that leave critical areas unprotected. Overpriced premiums that don't provide sufficient benefits for the cost. Poor customer support that adds stress when you most need help. These issues don't have to define your insurance experience. By staying informed and proactive, you can address problems, renegotiate terms, or switch to a better provider when necessary. Empower yourself to take control of your insurance so that it genuinely protects you when it matters most. Now's the time to act. Review your policies today. Assess your coverage, costs, and experiences with your insurer using the tips shared in this video. If anything feels off, reach out to your provider or explore alternatives. We'd love to hear from you. Share your insurance experiences, questions, or concerns in the comments below. Let's build a community where we all help each other make better, more informed decisions about our financial safety nets. Thank you for watching, and we hope this guide helps you secure the protection you deserve. If you found today's video helpful, please like, subscribe, and share it with someone who could benefit from these tips.